Good morning. Welcome to the Money Matters for the week ending August 15th, 2025. Today's video is going to be a little different. I want to talk about a very specific idea and bring some folks up to speed because this has been a growing trend, which I think has a lot of advantages. So the phrase is direct indexing. Now, some of you may know what that is, and some of you will probably go scratching your head. So let me explain it. So indexes got really popular in the late 90s and 2000s, with Vanguard and Fidelity, the S&P 500 index, the total stock index, bond indexes. The most common one is the S&P 500. And the idea is instead of trying to buy these companies yourself, you buy the index, right? And you get a low cost exchange traded fund, and you generally get the return of the index. So if the index is up, you're making money. If the index is down, you're losing money, but you've got instant diversification, and you're not trying to pick your stocks. And that still worked out really, really well. Now, as we continue to evolve and look further, there are challenges with indexes, particularly in non-qualified accounts. Again, what's a non-qualified account? It's something that's not tax sheltered. So like your IRAs, your 401ks, et cetera, those are all tax sheltered. A non-qualified account would be like a regular brokerage account. And you'll know it's a regular brokerage account because at the end of the year, you get your 1099s and you have to pay interest on dividends and capital gains. And we want to pay close attention to these capital gains. So when you have a year like 2023 or 2024 where the index is up, you will likely have some capital gain distributions. You may likely have capital gain distributions when the index is down as well. And you also don't have any control over. So what direct indexing is you have a team of managers that, let's say for the S&P 500, instead of buying the index, because a lot of those companies really don't contribute to the return, they are selecting maybe the best 200 to 300 companies inside that, and they're actively trading. Okay. And so let me give you an example of why this might make sense. So this is a program we use quite often from Russell. And you'll note on the surface, it's not super exciting. Their gross return for 2023 was about 26%. That was just shy of the actual index. You'll note below there's a net of fees. That assumes a 3% advisory fee, which is ludicrously high. Most are around 1.5. But it's very close to the index. So you go, okay, well, why would I do that? Well, even though the return for the year was almost 26%, remember, there are stocks throughout the year that are up and down and up and down and up and down. And what this program does is it trades on those stocks to try to generate losses. So you get, market-like return. However, you also have the opportunity to capitalize on losses. So this number down here at the bottom, and we'll attach this fact sheet, this was their gain loss, cumulative tax loss for the year. So to put it in numbers, maybe that'll make sense, the account was up just shy of 26%. So on $1 million, that was $260,000. Now, 2023 was a good year. I don't want to act like it's going to do 26% a year, but the realized tax loss was a little over 7%. So if somebody had $1 million invested in this account, they made roughly $250,000, $260,000, but they also got just over $70,000 of tax losses that they could use to offset current gains, carry forward, etc. So this is a really, really neat program. Again, if you have, I would say, even 300,000, 400,000 or more of non-qualified assets, and you're okay with market-based returns, it's really an interesting alternative to the traditional index investing because it does have so many more tax benefits. Now, I know a lot of you are going, holy cow, didn't make any sense. And some of you are nodding your head yes. No matter what camp you fall into, if you have questions or if you want more information, please reach out. We are here for you, your family, and your friends. As always, thanks for watching. Have a great day.